think in a global context, we will see more of that. And we've seen already companies, headlines where companies have cut the dividend for the first time since World War II, and those kind of, pretty sensational stuff around dividends. I mean, that is still going to happen, I think, when you see an environment where cash flow, earnings, everything is coming off, they'll offset a little bit by capital spending also falling as well. Then there is going to be some pressure. Now, the thing that gives a bit more confidence about Asia is that Asia, has for years had lowest payout ratios globally. So they have also not been spending money on buybacks. And if you look at the US, for example, the S&P 500 over the last 5 years, the kind of EPS growth annualized is only 5%, excluding the effect of buybacks. So buybacks, corporate tax reform, everything has had a huge boost for that market. But in Asia, it's not been like that. So balance sheets we're not seeing that same level of corporate leverage going up. We see payout ratios low, and so there's a lot more flexibility. And if you go back in history and say, well, what happened in 2008 in Asia? Well, even though 45% of companies actually cut dividends, 32% increased their dividends. And over the decade up to today, just over 50% of your total equity returns have been in the form of dividends. So dividends are important in Asia, but also, they're quite low. So we think that there is more upside. And especially in North Asia, there's actually been a little bit less pressure on those dividends.